Hello, fellow traders. 'Tis I, the Rumpled One. Merry Christmas. Happy holidays. It is Friday, December the 22nd, the year 2017. Kiss. The greatest band, right? No, not that Kiss. The Keep It Simple, stupid. Actually, I had a different topic planned for today. I was checking my email, and there was this email about success. And they said that if you have an 80% chance of doing something successfully, if you try to do a second thing that also has a 80% chance, then you reduce your success rate down to 64. And if you add your third thing, then it's almost a coin toss. The point being is focus on one thing. How's that apply to trading? Well, once again, focus on one pair. Focus on one entry method. One way of managing your money. Just keep it simple. Reduce the variables to the point where the only thing that's variable is what the market does. Because you, once again, can keep your loss at a consistent 1% or $10 a trade, or it won't exceed it. Maybe sometimes you'll scratch a trade because you can just see it's not going anywhere and why, and it's just not working out, so you just exit the trade at either a small loss or a small profit or a break even. In fact, I even did that. I think it was yesterday. I just took a scratch trade. It was like, this ain't working. So once again, we're looking at the weekly, all gaps filled. You can see the distance here between the current close and the weekly open. If you just took that one simple weekly crossover trade, in some cases you would have made over 100 pips. Simple, simple, simple trade. Bringing it back to the daily. The same thing here. Looking at close versus the open. You can see you've got a lot of 10, 20, 30 baggers there. So the reds if you were short, the greens if you were long. And as you can see here, the Swiss franc is just going up, up, up from that daily open. And here we have it right here. We had a trigger. If you didn't exit, it took some heat, but you see it paid off. But let's see, this is about 7 a.m. my time. So actually, this is the 6 o'clock candle, which makes that the 9 o'clock over on the East Coast. So if you got up a few hours ago and you took that trade, there you have it. Now, you could say, well, why would I take this trade here? All these H1 candles were red or black. They were bear candles. And you said don't trade against the H1. Well, that's the rule of thumb. But sometimes here you can see what price is doing. It doesn't want to go below. So you may have broken that rule and it would have been profitable. The point being is once price gets past that into the buy zone here, it has to range, and it ranges away from the open. And here's the daily open, here's the weekly open. You can see here they're saying no, you're not taking us down. This is analyzing, this is doing your price action, simple trades. Or you could have skipped it, and that's okay too. Once again, we don't have much of a daily range, so you see the rat zones overlapping. No point, even though right here you have a rat reversal. Looking at the pivots, you can see here it just took off right from the pivot. And looking at the price action, it's telling you higher lows, which means price is going up. And the 5 lines, you right here, it bumped on yesterday's high and is retreating. But you can see here, just trading the horizontal lines, nothing complicated. No squiggly lines were harmed in the making of this video. So no complicated formulas. And once again, you can see we've got some pairs in the upper and lower rat zones. Anything 20 or less would, like right here, would be. But if they're both highlighted, you can see that's not greater than 40. So you pretty much want to pass on those. Look at these narrow trades. It is pretty much a holiday right before Christmas, which is Monday. So you can see there's not really much action. And the wick zone price is still in it. Hasn't had a chance to leave it. So a no trade there. And the holo setup, well, it just took off right from the open. Here we have the highest open at that 0.99, which is 03, which is near the 0.9900 psychological trade. So let's see what happens if they want to push it back down. And let me just give you a little preview for the 2018 donationals. Along the lines of keeping it simple, I think I might have showed you this indicator the other day, but I've actually worked on it a little bit more, and it's real simple. It'll show you the last green candle. In my case, I have them white and black for the bear candles, white for the green. So you can see here, this was the last green candle, and this was the last red candle. And why? Well, it's kind of interesting if you look at it. You can see here, price came down, switch to the 1 minute. Price came down, and then it broke through the last down candle. So that means all these sellers got pushed back for the buyers. And see right there, you could add a nice little 4 pip scalp or so. And so now here you can switch. You can see green got above red. Well, what's that telling you? It's telling you price is going up. So you don't want to think short until you trigger out of a bottom of the last red or last green. You can move that over to 5 minute chart. And here once again, you see it popped here and then popped there. Once again, opportunities, simple. Just looking at the last red candle, last green candle. You can move it to the M15 chart. You can see here it broke through this high, but you're still within here, and you can see there's a little fight going on, and now we've got the breakout. And if you switch over to M30, kind of looks the same. H1 price action right there, breaking out. H4 broke out back here, and you can see it broke out. Actually, it went down, broke out, came back in. So once again, you can use some of those price action, just looking at the price action here of these breaks, when to exit. We can even look at it on the daily. Once again, here's the last red day right here. You see a little break there, break to the downside the next day. Okay, so that's what that indicator does. Now this one, I'm calling this the trade reminder, and I've got it set up so it will just pop out these little reminders. For example, on the month, the prices between the wick zone, monthly buyers have strong control, price is 3 pips above the previous mid, something I like to look at. We've got a lower high and a lower low. So on a monthly, that's telling me prices heading down. Weekly, previous bar was an inside bar. If we switch over, I should have probably had the month up there first. Let's put the month up so you can see it. See, prices between the wick zones. And there's the previous mid right there. This is the pivot. You see it, the close crossed above the pivot right there. So it's happening this month. Lower, high, lower, low. So then we drop down to the weekly, previous bar, inside bar. Price between the wick zones once again. Buyers strong control at the moment. Lower, high, lower, low. You can see that there. Right, yeah, we're on the weekly. And then we switch to the daily. Okay. And you can see price crossed above the W1 open. Okay. See, weekly open. Was right there. Price is above it. Let's go back down here to the daily chart. And we've got the D1 2.5 pips below the high. Price inside the upper wick zone. Buyers strong control, higher high, higher low. And this indicator, I've got it set up. Let's see, right here. You can have up to 4. Thing is, if you drop down, like you could even put this on current. And it looks like I'm going to have to make a little change here. So if the current is already equal one of these, let's not put this out twice. But if you drop down to H1, you get more information. And drop down to M5. So that's a couple things coming out in next year's donationals. One more. I had somebody send me a message, and they noticed something on a chart the other day. I was showing the weekly chart of the franc, and they were asking me, can I do some kind of indicator that alerts it when you get price up here in the previous 2 candles wick zone? So I was like, yeah, that's something interesting. So I haven't turned the alerts on yet, but I do have the indicator that I started. But I wasn't sure of something, so hopefully the person who asked me about it can answer the question. I'm not sure exactly what you want to see and when you want to see it. I think this is it right here. So if price got up into here, you'd want to be alerted. But there was a couple of interesting questions. You see here how this isn't shown. It's because this and this are so far apart. What I did was I put in a tolerance. You can turn the tolerance off, and the tolerance is the distance between the top of these 2 candles or the bottom. And if it's outside a certain range or outside the tolerance, it won't show. So I'm not sure, like in this case, you really wouldn't want it to show, I don't think. And in this case, you really wouldn't want it to show. But the question is, I'm not sure, like if we were back one, would you want this to show? Because you see here, price got it would be between here and here. But this bottom, or this candle top, is so far below this candle. Now, would you want the line here? Right there? Or would you want the line there? And I'm thinking you want the line at the minimum. So you're getting out of the wick zone. Because see, that's the wick zone there. So you're getting out. But I'm not sure exactly what you wanted. So that's my question. I'm trying to remember, was there any other pair that was interesting? See, once again, you can see here, I don't know if this is what you want or not. So please get back to me. Anyway, fellow traders, you have a very Merry Christmas, Happy Holidays, and remember, keep it simple, because it's not what you trade, it's how you trade it. TheRumpledOne signing off.